Hi, I'm Jonathan Banks, Executive Automotive Analyst at NADA Used Car Guide with this month's market update. The busy summer vacation season didn't disappoint as new and used sales remained unquestionably positive in June. Deliveries of new vehicles were up by 1% compared to last June, with mainstream brands up a collective 0.7%, while luxury brands achieved 5% growth. The strong month continued to support year-over-year growth, with sales in the first half of 2014 up 4% higher than 2013. June's seasonally adjusted annual rate, or SAAR, almost touched 17 million units by reaching 16.9, 7% higher than last year, and the highest level recorded since July 2006. NADA's chief economist, Stephen Zackley, points to a strong housing market and positive employment factors as drivers of strong new sales. And these factors are also the fuel to give NADA confidence that we will maintain our original 16.4 million forecast. Fiat Chrysler maintained its torrid pace as deliveries were up 9%, mainly due to Jeep and Ram's respective 29% and 14% sales growth. Sales at General Motors were up slightly, with deliveries increasing by 1%. But Ford Motor Company lagged as its new vehicle sales declined by nearly 6% due to falling sales for both the Ford and Lincoln brands. Import brands largely fared better than domestics, with sales growing by 2% in June, while year-to-date deliveries have increased by 5%. Asian brands performed best and were up 2%, and Mazda was particularly impressive, with deliveries up 17% behind strong performers such as the Mazda 6, Mazda 3, and CX-5. Nissan and Toyota were both relatively solid, with deliveries for the two companies up 5% and 3% respectively. However, American Honda Motor Company sold 6% fewer vehicles than a year ago, with sales declining for both the Honda and Acura brands. European brands were down a collective 0.7%, primarily due to Volkswagen's alarming drop of 22%. Excluding VW and Volvo, deliveries for other European brands rose by more than 9%. At the top of the leaderboard is Audi, whose 23% sales gain was propelled by its newest generation A3 model. Per auto data, average incentive spending increased by about 2% from last year to reach about $2,700 per unit. Through June, spending averaged about the same amount, but up 4.2% compared to last year. The sweeter incentives dropped in inventory to a healthy 59 days in June, a one-day decline below May, and a figure lower than 2013. On the used side of the market, wholesale auction prices of vehicles up to 8 years in age fell by 2.4% compared to May, a figure in line with NADA's forecasted decline of 2 to 2.5%. The month's fairly typically showing left NADA's seasonally adjusted used vehicle price index essentially unchanged at 126.4, a scant 0.1% lower than May's record high of 126.5. Depreciation across segments followed recent patterns, where declines for subcompact and midsize cars overshadowed the overall market average, while losses for large pickups and SUVs were below the industry mean. Subcompact and midsize cars were the two biggest moving segments on the non-luxury side of the market. Collectively, the two fell by 3% in June. Over the past 3 months, prices for the two car segments has fallen by an average of nearly 7%, or nearly as much as the two gained over the first quarter of the year. Luxury midsize and luxury large cars were two other bigger moving segments for the month, as prices for the two fell by an average of just over 3%. With an average decline of just 1%, large pickups and SUVs continued to perform well in the wholesale marketplace, while depreciation for segments fell within 0.4% of the industry average. Overall, wholesale prices over the first half of the year were stronger than what was recorded for the period last year, and as a result, prices year-to-date are nearly 3% higher than they were through June 2013. Prices for large pickups remain nearly 12% over last year's level, and the segment continues to lead others by a wide margin. Year-to-date growth for fellow truck segments, like large SUVs and mid-size utilities and vans, have also been significant, with prices up by 5 to 7%. Small cars haven't performed nearly as well, as prices for subcompacts are down by almost 2% compared to last year. Prices for every luxury car segment are lower as well, and the 5% loss for luxury large cars is the most in the industry. Looking ahead, NADA's forecast for July and August has changed little from last month's edition of guidelines. Depreciation is expected to slow to a rate of approximately 1% in July, with car depreciation again outpacing that of trucks, especially on luxury models. Losses for cars are expected to exceed 1%, while truck depreciation is forecasted to be under this figure. Large pickup and SUV prices are anticipated to be flat to slightly up per the seasonal norm. Depreciation is forecasted to pick up to a range of 1.5 to 2% in August, and before increasing to an average of roughly 2.5% in September. For additional market insight, please download July's edition of Guidelines. Thanks for watching.